Abhiraj, obviously you've not set any timeline, but you have spoken about going public. Keep aside the current market situation, which like Sahil mentioned, it's sort of happened in the US, it's happening in the broader public market as well. How did you kind of decide that you wanted to go public? You are also a consumer internet business, unlike Sahil's, which is sort of more B2B. What really was the thought process? And to Nitin's point, I mean, how do you kind of decide on going public, considering there'll be this quarter-on-quarter pressure, there'll be a expectation from the market that you turn profitable, etc.
Yeah, Samita, I think the question, sort of the way I see it is, it's a question of when, because the moment you take the first venture capital check, right, the taximeter is down. So in some sense, you've got to return it, and that could either be through a secondary exit or eventually going public. And I think going public is, it's a very broad-based way of creating wealth for your employees, for all the investors. I think beyond governance, 2-3 things are very important, and Nitin spoke about them. One is just predictability. Public markets, as a private company, if you do 96, 97% of your annual operating plan, the investors will sort of clap. As a public company, if you miss by 1%, that can be your stock taking a significant beating. So you've got to have very, very strong underlying predictability. Along with that, you have to have scale and, at least a profitability profile, so that people know that you're a real business, you're relevant to lots and lots of consumers. You're not a sort of niche business or a concept business. So that's how we think about it. Internally, we've already started the work. I think adding independent directors helps significantly, and we've recently done that. So that process is on, and that journey is on, and hopefully it'll culminate into not just an IPO, but us being a good, well-run public company, which is more important.